When most people think about investing, they immediately picture huge sums of money, thousands of dollars, maybe even tens of thousands, sitting somewhere in a brokerage account. It feels distant, almost impossible, especially if you're just starting out or living paycheck to paycheck. But here's the truth they don't tell you. You don't need a fortune to start building one. In fact, you can start investing and changing your financial future with as little as $100. That's right, 100, not $10,000, not even $1,000, just $100. And today, I'm going to show you exactly how to do it, where to start, and why starting now, no matter how small, could be the single smartest move you make for your future self. $100 invested wisely today can turn into thousands later. More importantly, the discipline you build by starting small compounds even faster than your money. All right, let's jump in. Here's the real deal. 1. Index funds, the low-risk wealth builder. If you only take one thing from this video, let it be this. Index funds are your best friend. It's basically a basket of stocks that mirrors a major part of the market, like the S&P 500, which tracks the 500 biggest companies in America, instead of trying to pick individual stocks which even professionals struggle to do consistently. You're buying a tiny slice of the entire market. Left to grow and compounded over 20 or 30 years, could turn into thousands. 2. High interest savings accounts. The safe start. If you're super nervous about losing money in the stock market, that's completely understandable. Maybe your first move isn't stocks, it's putting your $100 into a high interest savings account, but not just any savings account, one that actually pays you to park your money. Traditional banks often pay a sad tiny amount of interest, sometimes 0.01%. That's basically nothing but online banks. Some offer 4% or even 5% APY annual percentage yield. That means your $100 actually grows while sitting safely in the bank, and it's a perfect way to start building your emergency fund, your opportunity fund, or simply to develop the habit of saving intentionally. Plus, it keeps your $100 liquid, meaning you can access it anytime without penalties. Here's the real advantage: momentum. Once you start seeing that small growth month after month, saving and investing more becomes addictive in the best way. It's not about the dollars at first, it's about building the discipline. 3. Fractional shares. Own big companies for small money. Imagine owning a piece of Tesla. With just $100, sounds impossible, right? After all, a single share of these companies can cost hundreds or even thousands of dollars. But thanks to fractional shares, it's completely possible, and it's a game changer for new investors. Fractional investing means you can buy a slice of a stock for whatever amount you have. Why is this powerful? Because it lets you start practicing early diversification. Instead of gambling all your money on one small risky stock, you can spread your $100 across 5 or 6 proven winners. This lowers your risk and teaches you how real investors think. Diversify to protect your downside. You don't need a huge portfolio to start learning these skills. You need $100, a strategy, and the courage to start. 4. Robo-advisors. Invest automatically like a pro, not interested in researching stocks or picking funds yourself. Perfect. Let technology do it for you. Robo-advisors are automated investment platforms that create and manage a portfolio for you based on your goals, risk tolerance, and time horizon. Think of them as your personal financial advisor, but way cheaper and available 24/7. Services like Betterment Wealthfront or Sophie Invest let you start with as little as $100. Some even have no minimums. They automatically diversify your money into a mix of stocks and bonds suited to your situation. The beauty of robo-advisors is that they remove emotion from investing. No panicking during market drops, no trying to time the market, just smart, consistent investing on autopilot. Plus, they automatically rebalance your portfolio over time to keep you on track. If you want a set-it-and-forget-it option that's still powerful, robo-advisors are your go-to. 5. Peer-to-peer lending. The riskier but rewarding play. If you're feeling adventurous and willing to take on a little more risk for higher potential returns, consider peer-to-peer lending platforms. Indies like Lending Club and Prosper allow you to lend small amounts of money to individuals or businesses, and you earn interest as they pay you back. Some platforms allow you to start with as little as $25 per loan, so your $100 could be spread across 4 different borrowers, minimizing risk. Why would you do this? Because returns can be much higher than traditional savings, sometimes 5% to 10% or more annually. But be warned, not every borrow repays, and there's a chance of losing money. That's why diversification, even within your $100, is key. Now that you know the top 5 investments, you can start with just $100. Let's talk about something just as important: how to actually get started without getting overwhelmed. Because here's the reality: the moment you decide to move from knowing to doing, you're going to face resistance, fear, doubt, analysis paralysis. You'll wonder, what if I lose it? Or what if this isn't the perfect move? Here's the truth you need to lock into your mind right now. There is no perfect investment. Waiting for the perfect opportunity is the biggest mistake beginners make. Smart investors don't wait for perfect. They move smartly with what they have. So, let's break down exactly how you can take action with $100 today. First, decide on your goal. Are you investing for long-term wealth like retirement? Saving for a short-term goal like a house or travel, or just building the habit? Your goal will guide where your $100 should go. For long-term wealth, index funds or robo-advisors are your best bet. For short-term savings, a high-interest account makes sense. For learning and experimenting, fractional shares could be fun and educational. Second, choose your platform wisely. Don't just jump onto the first app you see because of an ad. Research platforms that offer low fees, fractional investing, no account minimums, and good customer support. Popular beginner-friendly platforms include Fidelity, Vanguard, Robinhood, M1 Finance, Sophie Invest, and Betterment. Each has pros and cons, but all of them make starting with $100 super simple. Third, automate if possible. One of the greatest secrets of building wealth is automation. Setting up an automatic transfer, even $25 a week, into your investment account takes emotion out of the equation. No forgetting, no "I'll do it next month," no sabotage. Your wealth grows quietly in the background while you live your life. Think of automation as a gift to your future self. Let's dive into the mindset shift you absolutely must master if you want to win with money, even when starting small. 1. Think ownership, not just savings. Saving money is crucial, but if you want real financial growth, you must shift your mindset from being just a saver to an owner. Owners build wealth. When you invest $100 into an index fund or buy a fractional share of a major company, you're no longer just a consumer, you're a part owner. Every time you see someone buying from Apple, Amazon, or Google, realize they're growing your investment. That mindset, seeing yourself as a participant in the economy, not just a bystander, is transformative. 2. Understand the power of compounding. Albert Einstein reportedly called compound interest the 8th wonder of the world. When you invest, your money earns returns, and then those returns start earning returns. It's like planting a tree that grows more branches every year. At first, the growth is slow, almost frustrating, but over time, it becomes explosive. Compounding rewards the early starters disproportionately. That's why even $100 today beats $1,000 years later. 3. Focus on behavior, not amounts. It's easy to get discouraged thinking $100 won't make a difference, but that's the wrong lens. What matters far more than the amount is the habit you're building. If you can invest $100 once, you can invest $100 many times. And over time, those small actions stack into something huge. Wealth isn't built through big flashy moves. It's built through small, consistent ones that most people underestimate. Now let's talk about how to scale your $100 investment into $1,000 and beyond. Scaling up, how to grow from $100 to $10,000. Once you've invested your first $100, the next step is making consistent contributions. Think of it like building a snowball. Each push adds a little more mass, and eventually it becomes unstoppable. Reinvest all returns, any dividends, interest, or profits you earn. Reinvest them immediately. This accelerates compounding. 3. Increase contributions with income. Got a raise, side hustle paying off. Allocate a percentage of every windfall toward your investments. 4. Cut and redirect. Look for small expenses you can cut and immediately redirect that money into your investment account. $10 saved on takeout is $10 invested into your future. 5. Stay invested. Markets will rise and fall. Your job is to stay the course. Wealth is the reward for patience. Risk warning. Be smart, not fearful. Now, a reality check. Investing is not risk-free. Every investment involves some level of uncertainty. Stock markets crash. Peer-to-peer borrowers default. Savings account rates drop. But guess what's even riskier? Doing nothing. Inflation, the invisible money eater, steadily erodes the value of cash over time. Sitting on $100 today without investing it almost guarantees it'll be worth less in 5 years. So instead of fearing risk, learn to manage it. Diversify. Educate yourself. Start small. Stay the course. Most importantly, never invest money you'll need tomorrow. Money you invest should be money you can afford to let grow for years. That's when real magic happens. Common mistakes to avoid. Let's save you from some rookie mistakes I made early on. Chasing get-rich-quick schemes. If it sounds too good to be true, it almost always is. Stick with proven strategies. Checking your portfolio daily. This leads to emotional decisions. Wealth grows in years, not days. Ignoring fees. High-fee platforms can quietly eat away at your returns. Choose low-cost providers. Thinking $100 is pointless. Every dollar you invest today is a building block for your future. Your $100 today could change everything. If you're still on the fence about starting with just $100, remember this: the hardest investment you'll ever make is your first one. Not because of the money, but because of the mindset. Once you take that first step, every step after gets easier. You're no longer someone who wants to invest someday. You're someone who is investing. You've crossed the line from dreamer to doer. It's not about $100, it's about the habit, the identity, the new trajectory you're setting in motion. You're showing yourself and the world that you're serious about your future. And the best part, you don't have to be perfect. You just have to be consistent. So if you've got $100 sitting in your bank account or gathering dust in cash, make the decision today. Start your investing journey. Choose one of these 5 simple paths. Set up your account, make your first deposit, and then keep going. Your future self will look back at today and thank you for the courage you showed. Don't wait for someday, make someday today. Start now. If you found this video helpful, smash that like button. It tells YouTube to share it with more people who need this info. Don't forget to subscribe for weekly money tips that are actually doable, even if you're starting from scratch. Drop a comment below. What's the first investment you're starting with? Let's grow together.